Alright, welcome back to another Ricey Trades video. Today we are talking about what I have been looking at over the past month. Now I imagine if you've clicked on this video, it's probably for one reason, and I'd say that reason is that you have been struggling with price action over the past month. And just so you know, you are not alone. Everyone has been saying that this is some of the craziest price action. I don't think in history we've probably had two of the biggest market names arguing online. And there's just so much things up in the air in terms of tariffs and policies Trump's bringing in. The markets just aren't moving as straightforward as they have been. And so as traders, as a lot of new traders at the moment, what can we do and what have I sort of been doing to try and get through that? And realistically, all I have been doing is looking through the past 1 to 2 months of data and really diving in deep to notice anything or any subtle adjustments that I can make. So that's what this video is I want to talk about what I have sort of found, what my 3 main takeaways are from backtesting lately, and what I'm trying to do on a daily basis when I come into the markets to sort of just improve my win rate realistically, because there are still good trades coming through. It's not like every single day is bad pricing, because that's just not true. I nearly every single day I go back through the charts and I see at least one trade that I could have taken, whether that's in my trading time or outside of it. There's always something happening in the charts that provides a valid entry. And so there's 3 main points I want to talk to today, and that is about daily bias over draw on liquidity over daily bias, not trading. I don't know why it's giving me a thumbs up there, but no trades without a clear draw on liquidity. And that sort of fits into the same point where I'm not choosing daily biases anymore. I'm more waiting for a clear draw on liquidity and using the 15-minute time frame to make that clear. And that's how I'm forming my daily bias. And then the other one is conservative profits. Purely because of the fact that we're not seeing those large extensions that we used to see sort of the whole New York session would be continuation from the start of the session manipulation, or the whole session would sort of move in one direction, whereas now I'm finding that a lot of the time it's that AM session is moving, and then a lot of the time there's manipulation before the PM session actually delivers. And so I have been noticing that a lot of my positions will get stopped out if I'm trying to take profits too deep, or if I'm looking for a longer play. So those are my 3 points today. I'm just going to quickly bounce through them, and you can take what you will. And this isn't even me in the charts today. This is just me and a camera talking about what I've been doing lately. But yeah, let's jump into it and let me know what you think. Okay, so coming back to point 1, the draw on liquidities over the daily bias. Now, this is probably something that's quite controversial, because usually draw on liquidity is the same as daily bias, and usually you form your daily bias based around draws on liquidity. However, the issue that I had with that is that I come into the market at 11 p.m., which is 30 minutes before New York Open, and I mark out all the draws on liquidity, and I used to form a pretty strict daily bias. Now, the reason that I'm not doing this so much anymore is because every single session we see a massive extension to take out the draw on liquidity before the macro opens. And as someone that doesn't take any trades prior to the macro opening, it's too hard for me to form a daily bias when consistently, I think I'd say probably 75% of market opens now, we are just ripping and taking out the obvious draw on liquidity before we even see that macro open. And so what have I been doing instead is I will mark out all the draws on liquidity that I could potentially see for the day. And a lot of the time there is going to be draws on liquidity to the upside, and there's going to be draws on liquidity to the downside. So if we see some of our draws on liquidity get taken, most of the time we will not see all of them get taken. Say market opens, we rip bullish. And this would be easier to describe on a chart, but I can't really be asked pulling it up. So we will move, we'll take, okay, fuck it, I'll pull up charts. All right, here we go. So this is my journal from Monday. I don't know why it is. All right, so this is my journal from Monday this week, and this is a perfect example of it. So I can't really open this up, can I? No, I can't. But as you can see here, we rip up and we take out 2 draws on liquidity prior to the macro opening. Macro opens and we've already had a bearish extension. Now, I lost a trade on this day due to the fact that we had such a big bearish extension off of a liquidity sweep, and that same liquidity sweep created a bearish SMT between pairs, which is relevant as hell for to have a short bias. Now the problem is I knew we still had further draws on liquidity to the upside, and I married my bias to the downside. And realistically, to the downside, there just weren't any draws on liquidity for this day. Now, had I stuck to my draw on liquidity play over my market analysis play, I would have been fine, because after this, as you come down here, this was the loss that I took. And the trade to take was realizing that we created a bullish SMT off of the lows, and then we could use that 15-minute time frame to confirm the new bias to still target the draw on liquidity for the day. And this is the sort of thing we're seeing at the moment. Like, this is why market conditions are so hard, is because we see manipulation early on through the day, but a lot of the time that manipulation doesn't distribute fully. A lot of the time that distribution is also a manipulation, and that's something that I've been seeing time and time again, is that we will manipulate, create a high time frame SMT, and then we'll react off of that SMT, but that reaction is not the distribution for the day. That is the manipulation, and then the actual distribution is off of another 15-minute bullish SMT or a bearish SMT to then take out the high or low that wasn't taken on the SMT. And this is why the trading has been so freaking hard. Like, this day is a clear example. We had 4 draws on liquidity to the upside. You can see 1 and 2 up there. We reacted bearish, and so I married a bearish bias. Now we come down here and we see that we had a bullish SMT. This is the 15-minute time frame. This is gonna be hard for you to see, but you can still get a gist. And then from here, I should have been looking for confirmation on the 15-minute time frame for longs, because the draw on liquidity is to the upside. This is so hard to explain to you guys because I don't 100% understand it. And it's still something that I'm really trying every day to come to the charts and play off. But that's why I'm using the 15-minute time frame more and more, is because say I have an unclear bias, or I have draws on liquidity to the upside as well as draws on liquidity to the downside, there is no point in me taking a trade until that 15-minute time frame has confirmed the draw on liquidity, because the 5-minute is so versatile. The 5-minute can give us breaker structures in either direction, whereas usually if a 15-minute break structure gives us an inverse for value gap or gives us some sort of confirmation, 9 times out of 10, if we've had a valid opening confluence, that 15-minute movement will distribute. And that is something that I'm trying to implement, is using the 15-minute time frame as opposed to the 5-minute. And yeah, so that is point 1. I don't know how much of that you guys are going to be able to understand, but I think by looking through previous charts and by doing your own sort of in-depth analysis like these, I'm doing top down. So I have daily bias, and then trade of the day, if there was a trade of the day, the trade that I took, and the trade that I should have taken. All of this stuff is what's going to make it clear for you. But anyways, I will jump into my second point, which is not trading until a bias is secured off that 15-minute time frame. And that's just exactly what I've been saying before, is that the 15-minute time frame is what is confirming my daily bias now. So without a really, like, obviously, if we have a day, market opens, we see manipulation, and there's no more draws on liquidity to upside or in that same direction, I don't care. Like, I will take a trade happily as long as there's draws on liquidity to the opposing direction. However, if it's a day like that one that I just showed you, and we take our draws on liquidity, we still have draws higher, and then we also have potential draws to the downside or opposing direction, I need some sort of 15-minute confirmation to confirm that, because I want to be predicting the hourly candlestick. I want to be predicting where that next hour or 2 hours is going to go. And so when market conditions aren't favorable and we have draws to both sides, it makes sense to really dial in those higher time frames, because that's giving us a higher time frame confirmation. Therefore, it's a stronger confirmation for one. And market conditions are also just slower. A lot of the time we see a 5-minute move, it doesn't really give us anything. And then we see a 15-minute retracement, which stops a lot of people out if you're trying to pump in your trades on those lower time frames. So this is the second point that I want to make, is markets are slower and markets are more variable. So if you stick it to a 15-minute time frame, in terms of your confirmation and 15-minute retracements, you are going to be catching higher confluence trades and higher probability trades, because a 15-minute confirmation is a lot stronger confluence than a 5-minute confirmation. So that's the other thing that I'm really trying to dial in at the moment. And the last point that I want to make today is the keeping profits conservative. And all this other stuff is sort of chart work stuff that I found by actually diving into the charts, whereas this one is more just common knowledge. If market conditions are not favorable, and if market conditions are like what we have at the moment, don't chase big profits. Chase I would usually be really wanting to dial in like a 1 to 2, a 1 to 3R, and I'm almost starting to just realize that when there's a really strong draw on liquidity, when there's say we have equal highs, if I see an entry on a 15-minute time frame or a 15-minute confirmation, I start scaling into my position there. I'm not looking for those higher risk rewards anymore at the moment, because realistically, when markets are less favorable, I'm not expecting to hit every single trade as well as I would in good conditions. It's just not realistic. And so for me, my main thing at the moment is adapting in my strategy in terms of time frames and in terms of biases and how I'm finding my bias. And then I'm also just keeping my profits more conservative. I'm being much less greedy. A lot of the time I'm taking a 1 and 2 profit and I'm just ditching my TP3. And I think that's absolutely fine, man. Like, you just have to be realistic about what we're looking at. You have to be aware that these market conditions aren't going to be around forever. And if you guys can master these conditions, like, that's my thing at the moment, is I'm looking at these as a challenge. I'm looking at these conditions as, hey, it sucks. Like, it sucks to trade in bad price action. But if you can be profitable in these, and if you can master these price actions, then wait until market conditions are clearer. The best traders in the world are struggling right now. And I think that if you can start really trying to dial these in, start learning how to adjust your strategy to different conditions, you are going to be trading so freaking well when it comes time for the markets to be moving better. And I am really, really, really looking forward to these next couple of weeks, because I've been putting in so much work. I've been analyzing the charts so much. And if I can just start trading these conditions profitably, then it's going to make my life so much easier when these conditions are gone. So that's sort of my little Sunday evening round. I thought I'd come try and make a video on a Sunday for you guys, and hopefully you get a little bit of value from this. I know it's been a lot of talking and I apologize for that, but this is just the sort of video I wanted to make today. Yeah, man, all the best for next week. I hope some of you can sort of take something away from this. If not, that's all good. Thank you for watching. Like and subscribe. I will be posting trade recaps next week, so hopefully you can see a bit of an insight there as well. And yeah, main thing, man, these market conditions aren't going to be here forever. Use them while you can, because this is such a good learning experience for all of us. Yeah, I saw someone post a TikTok the other day, and he'd been trading for 10 years. He said he's never seen anything like this, and these are the hardest conditions he's ever seen. And he said it perfectly. He said that if you can learn how to trade well in this price action, you will be a bulletproof trader, and you will make so much money in the long run because you have learned to trade in the hardest conditions that he's ever seen. And market conditions aren't always there forever. Like, I guarantee you, in 6 months' time, the conditions will not be like this. They'll be clearer, there'll be less news, and we'll be able to make some serious profits. But now it's just doing the work, stopping crying about it, and just trying to accept what we see on a daily basis and work with what we've got in front of us. I'm so out of breath. I've got really low iron at the moment, so I can't really talk. But thank you for tuning in. Love all of you. Rusty Trades out.